The most important company in the world just sent a bill to the second most important company, and the number at the bottom of the invoice is 20% higher than anyone expected.
20%? That's not inflation, that's extortion. Welcome back to Asia Tech Macro. I'm Maya, and today we are talking about the TSMC price shock and what it means for Nvidia's earnings this week.
I'm Alex, and let's be clear, if you own stocks, any stocks, you need to listen to this. On Friday, rumors leaked from Shinju that TSMC is raising prices for its 3nm and 2nm wafers.
This is huge. Nvidia's Rubin chips, Apple's iPhone 18 Pro, they all rely on these nodes. If the cost of goods sold, COGS, jumps 20%, either Nvidia's margins crash or they pass the cost to us.
Exactly, and that's why the market is nervous. We are heading into Nvidia's Q4 earnings call this Wednesday, and the expectations are already sky high. But TSMC holds all the cards. They are effectively saying, you want the chips? Pay the geopolitical premium.
Geopolitical premium? That's a polite way of saying insurance against a blockade. But Alex, it's not just price. I'm hearing about energy bottlenecks in Taiwan.
That is the silent killer. Taiwan's grid is maxed out. Google and Microsoft want to build more data centers in Asia, but Taiwan literally cannot plug them in. This is forcing a massive supply chain shift.
Which brings us to Japan. The Kumamoto Fab 3 project was just greenlit last week. Is this the backup plan?
It's not the backup plan anymore. It's the growth plan. TSMC Japan is the only place with enough water, stable power, and government subsidies to scale quickly.
So the center of gravity is shifting north. But Alex, let's look at the sovereign AI angle. You mentioned last week that nations are buying chips directly.
Yes, this is the wild card for Nvidia. It's not just Amazon and Meta buying GPUs anymore. It's Saudi Arabia, Japan, France, and Singapore. They are buying sovereign clouds.
That demand is price inelastic. A government doesn't care if the chip costs 20% more. They care about national security. So maybe the price hike won't kill demand.
That's the bull case. But there is a bear case that nobody is talking about.
A bear case nobody's talking about? Alex, the Nvidia hype train is running on nuclear fuel right now. Everyone thinks AI demand is infinite. What are you seeing?
I'm seeing the CapEx wall. Microsoft and Google are spending $50 billion a quarter on AI infrastructure, but the revenue, it's a rounding error compared to the spend. Investors are starting to ask, where is the profit?
The classic show me the money phase. We saw this with the dot-com bubble. Cisco sold the routers, but the websites weren't making money yet.
Exactly. If TSMC raises prices by 20%, that CapEx wall gets even higher. Microsoft's CFO has to explain why their margins are shrinking while they build empty data centers in Iowa.
That is a dangerous narrative shift. But let's play devil's advocate. What if the inference market we discussed 2 weeks ago, SoftBank Intel, actually explodes? Does that save the day?
It might, but remember, TSMC makes chips for everyone. If SoftBank's Project Izanagi succeeds, TSMC wins. If Nvidia stays dominant, TSMC wins. The only loser is the company paying the bill.
So TSMC is the casino owner. The house always wins. Speaking of winners, let's talk about Japan's role in this new pricing structure. You mentioned Kumamoto.
Yes, TSMC Japan, JASM, is reportedly negotiating a separate pricing tier for domestic customers like Sony and Toyota. This is huge.
Wait, a discount for locals? That sounds protectionist.
It's strategic partnership pricing. If Sony provides the image sensors and the land, they get a break on the logic chips. This makes Japan the most cost-effective place to build edge AI devices.
That explains why Tokyo Electron and Advantest are rallying, despite the broad market tech sell-off. The equipment makers love new fabs, regardless of who pays for them.
Which brings us to our contrarian corner.
All right, Alex, what is the consensus truth about the AI chip shortage that you are ready to dismantle today?
The consensus is that TSMC is invincible because nobody else can make 2nm chips. Everyone believes Samsung is broken and Intel is dead.
And they aren't? Samsung's yield rates are terrible. Intel is still struggling with 18A.
I think that in late 2026, Samsung will steal 30% of Nvidia's low-end orders. The contrarian view is that good enough is good enough.
Wait, Samsung? Nvidia famously hates them, but you're saying price matters more than perfection now?
Exactly. For the absolute bleeding edge, H100 Rubin, you need TSMC. But for the mid-range inference chips, if TSMC raises prices 20%, Samsung suddenly looks like a bargain at a 30% discount.
So it's the Walmart strategy. Samsung becomes the discount foundry for mass market AI. That is a brutal but logical pivot. If inference becomes a commodity, cost is king.
And don't forget Intel. Their 18A process is do or die. If they can just show one working chip for Amazon or Microsoft, the narrative flips.
So the monopoly isn't as solid as it looks. TSMC is pricing itself into competition. Okay, let's translate this into moves. What are the action items for this week?
Action item 1. Long ASML, ASML/Tokyo Electron, 8035.T.
Equipment makers again?
Always. Whether TSMC builds in Arizona, or Samsung builds in Texas, or Intel builds in Germany, they all need the same machines. It's the only true neutral bet in the chip war.
Selling shovels in a gold rush. Classic. What's next?
Action item 2. Watch Nvidia's gross margin guidance.
This is for Wednesday's earnings call.
Yes, ignore the revenue beat. Look at the margin forecast. If they guide lower because of TSMC's price hike, the stock dumps 10%. If they maintain margins, it means they have pricing power over customers.
That is the signal. Can they pass the cost? Got it. And the third one?
Action item 3. Short Apple, AAPL, on hardware costs.
Short Apple? That's sacrilege.
Hear me out. Apple cannot raise iPhone prices much more. If their chip costs go up 20%, their margins get squeezed harder than anyone. They don't have the AI hype buffer that Nvidia has.
That is a painful truth. Consumers are already maxed out on $1,200 phones.
It's a margin compression story for consumer hardware. But Maya, before we wrap up, let's zoom out to the energy crisis.
The energy crisis again?
Yes, AI data centers now consume more power than some small countries, and Japan was restarting nuclear reactors specifically to feed this demand.
Which brings us back to the macro picture. Energy is the new bottleneck for compute.
And the companies that control the electrons, like Kansai Electric or Kyushu Electric, are the unsung heroes of the AI boom.
Utility stocks as AI plays. That is the ultimate boring but lucrative trade.
Exactly. So for our listeners, don't just watch the chips, watch the power lines.
Thanks for the deep dive, Alex. You made me worried about my iPhone bill, but excited about nuclear power.
That's the goal. Next week, we are pivoting to Southeast Asia. There are rumors that Vietnam is becoming the new China +1 manufacturing hub for Apple at a scale we haven't seen before.
Vietnam taking over? We will dig into the labor data and the infrastructure.
Can't wait. Thanks for listening to Asia Tech Macro. If you found this breakdown helpful, please follow the show and share it with a friend who thinks AI chips are free.
Stay data-driven. See you next week.
Bye.